Comprehensive analysis of Visa Inc. V through Warren Buffett's investment lens. One business quality and economic moat analysis. Visa Inc. NYSE. V. Operates as a global payment technology company that facilitates electronic funds transfers worldwide, primarily through its Visa-branded credit, debit, and prepaid cards. Founded in 1958 as Bank Americard, the company has evolved into the world's largest payment network, processing over $16.1 trillion in annual transaction volume across more than 200 countries and territories. Unlike traditional financial institutions, Visa operates a capital-light business model where it acts as an intermediary between merchants, financial institutions, and consumers without assuming credit risk or carrying loan balances on its balance sheet. 1.1 Revenue model and business operations. Visa generates revenue through a multi-stream model that leverages its massive transaction volume. Service revenues. Fees charged to financial institutions based on payment volume for Visa-branded cards, representing approximately 36% of total revenue. Data processing revenues. Fees for authorization, clearing, settlement, and other network services, constituting about 38% of total revenue. International transaction revenues. Cross-border transaction fees and currency conversion charges, accounting for approximately 20% of revenue. Other revenues, including value-added services such as fraud prevention, analytics, and licensing fees. This diversified revenue structure benefits from the secular shift toward electronic payments, with digital payment volume expected to exceed $15 trillion annually by 2028. 1.2 Competitive advantages and economic moat. Visa possesses several durable competitive advantages that create a wide economic moat. Network effects. Visa's platform connects 4.7 billion cards with 130 million merchants globally, creating a self-reinforcing ecosystem where each new user increases the platform's value for all participants. This creates significant switching costs for both consumers and merchants who would face disruption by moving to a less ubiquitous network. Intangible assets. The Visa brand is one of the most recognized globally in payments, backed by decades of trust and reliability. The company's proprietary technology infrastructure, VisaNet, processes over 65,000 transactions per second, with 99.9% fraud detection accuracy. Scale advantages. Visa's massive transaction volume provides cost advantages through operational leverage, allowing it to invest in innovation while maintaining industry-leading profit margins. Regulatory barriers. The payment industry is highly regulated, creating significant barriers to entry for potential competitors. Visa's compliance, infrastructure, and global licensing agreements would be extremely difficult and costly to replicate. Table. Visa's economic moat assessment using Buffett's framework. Moat component. Visa status assessment. Brand value, one of the most recognized payment brands globally. Strong network effects. 4.7 B cards, 130 M merchants, $16.1 trillion annual volume. Exceptional. Switching costs high for both consumers and merchants. Strong cost advantage. Massive scale provides operational efficiency. Strong and tangible. Assets. Proprietary technology and regulatory licenses. Strong. Despite these advantages, Visa faces challenges, including increased competition from fintech companies, potential regulatory scrutiny, and the ongoing shift toward alternative payment methods, including blockchain-based systems. However, the company's continued innovation in areas like AI-driven fraud detection and stablecoin integration positions it to maintain its leadership position. To management quality assessment. Warren Buffett places immense importance on the quality and integrity of management when evaluating investment opportunities. Visa's leadership team demonstrates several characteristics that align with Buffett's preferences for capable and trustworthy stewards of capital. Strategic vision and execution. Under CEO Ryan McInerney, Visa has continued to expand its global footprint, while investing in next-generation payment technologies. Capital allocation excellence. Management has demonstrated exceptional capital allocation through strategic acquisitions, targeted investments in complementary technologies and platforms. Shareholder returns. Returning substantial capital to shareholders through both dividends and share repurchases. In Q3 2025 alone, Visa repurchased $16.71 billion of stock, and paid $4.22 billion in dividends. Balance sheet management, maintaining a strong financial position with minimal debt relative to earnings capacity. Shareholder alignment. Insider ownership is relatively low at 0.59%, which is common for large-cap companies, but may not fully align with Buffett's preference for significant insider ownership. However, management's capital return policies and consistent focus on long-term value creation demonstrate commitment to shareholder interests. Transparency and communication. Management provides clear financial disclosures and regular updates on strategic initiatives. The company's annual shareholder meetings offer comprehensive overviews of performance and strategy. Despite these strengths, the modest insider ownership might give Buffett pause, as he typically prefers management teams with significant personal investments in their companies. However, the exceptional capital allocation record and transparent communication largely offset this concern. 3. Financial strength evaluation. Warren Buffett prioritizes companies with strong financial fundamentals, including consistent revenue growth, healthy profit margins, high returns on equity, minimal debt, and strong free cash flow generation. Visa's financial profile is exceptional across all these dimensions. 3.1 Revenue growth and profitability. Visa has demonstrated consistent revenue growth and exceptional profitability. Revenue TTM, $38.89 billion, with 14.3% year-over-year growth in quarterly revenue. Profit margin, 52.16% net profit margin TTM, reflecting the company's pricing power and operational efficiency. Operating margin, 66.77% TTM, among the highest in the financial services industry. Gross profit, $38.03 billion TTM, with a 97.77% gross profit margin. These metrics demonstrate Visa's exceptional ability to convert revenue into profits, a key Buffett criterion. 3.2 Return on equity and invested capital. Buffett places great emphasis on return on equity ROE and return on invested capital ROIC as measures of management's ability to generate value from shareholder capital. Return on equity TTM, 51.75%, significantly above Buffett's typical 15% threshold for attractive businesses. Return on assets TTM, 17.05%, indicating efficient use of assets. Return on invested capital, estimated at 28.35% based on normalized metrics. These exceptional returns indicate highly efficient use of shareholder capital in a business model that requires relatively little capital investment to maintain growth. 3.3 Debt levels and financial health. From a balance sheet perspective, Visa demonstrates remarkable strength. Total debt, $25.14 billion, with long-term debt of $19.6 billion. Debt-to-equity ratio, 65.02%, which is reasonable for a company with Visa's cash flow stability. Interest coverage ratio, 174.15x, indicating exceptional ability to service debt obligations. Current ratio, 1.12, indicating adequate short-term liquidity. Altman Z-score, 7.96, indicating very low bankruptcy risk. The company's debt-to-revenue ratio of 0.62 is conservative, particularly given its strong cash flow generation. 3.4 Free cash flow generation. Visa demonstrates exceptional cash flow generation, which supports its dividend payments and share repurchases. Operating cash flow TTM, $23.48 billion. Levered free cash flow TTM, $18.05 billion. Free cash flow margin, approximately 46% of revenue, indicating high conversion of revenue to cash. Table. Visa Financial Health Assessment 202-42025. Financial metric status, Buffett Standard Assessment Revenue. Growth 14.3% YoY. Consistent growth, excellent. Profit margins 52.16% net. Consistently profitable exceptional ROE TTM 51.75%, 15% plus exceptional. ROIC approximately 28.35%, 15% plus exceptional debt. Equity 65.02% minimal debt. Good interest coverage 174.15x, 5x exceptional for intrinsic value estimation. Warren Buffett focuses on intrinsic value, the discounted value of the cash that can be taken out of a business during its remaining life either in prevailing market prices. Estimating Visa's intrinsic value presents challenges due to its premium valuation, but we can utilize several approaches. 4.1 Discounted cash flow analysis, applying a conservative DCF valuation to Visa. Current free cash flow TTM, $18.05 billion. Assumed growth rate, 12% for next 5 years, below historical average but conservative. Terminal growth rate, 3%, approximately GDP growth. Discount rate, 8%, reflecting Visa's low-risk profile.
How?
This conservative model yields an intrinsic value of approximately $290 to $310 per share, below the current market price of $341.61, 4.2 earnings power value. Using Visa's earnings power as a valuation basis. 2024 EPS, $10.25 TTM. 2025 EPS guidance, approximately $12.84 based on analyst estimates. Normalized PE multiple, 25 to 28x historical range for quality companies. This suggests a fair value range of $321, $359 per share, roughly in line with current pricing. 4.3 Relative valuation. Visa's current valuation multiples include TETM, 33.36x. Forward, PE, 26.60x. Price, sales, 16.71x. Price, book 17.54x. These multiples represent a premium to the market, but are justified by Visa's exceptional growth, profitability, and competitive position. 4.4 Morningstar quantitative assessment. Morningstar's quantitative model suggests Visa is trading at a 35% premium to its intrinsic value estimate of $222.34. However, this appears overly conservative given Visa's growth prospects and competitive advantages. Based on the available data, Visa appears fairly valued to slightly overvalued based on current earnings power, but may have upside potential if growth exceeds expectations. 5 Long-term prospects and risks. Evaluating Visa's long-term potential requires examining industry dynamics, competitive positioning, and various risk factors that could impact the company's ability to compound capital over the next decade. 5.1 Industry. Outlook and growth potential. The electronic payments industry presents substantial growth opportunities. Digital payment growth. Global digital payment volume is expected to exceed $15 trillion annually by 2028, driven by contactless payments, embedded finance, and decentralized finance DeFi adoption. Cash displacement. Approximately 65% of global transactions still involve cash, representing a significant growth opportunity as electronic payments continue to gain share. Cross-border expansion. Visa's cross-border transaction volume grew 11% year-over-year in Q3 2025, outpacing domestic growth. Visa is positioned to benefit from these trends through its global scale, brand recognition, and ongoing innovation. 5.2 Competitive threats and market position. Visa faces competition from several fronts. Traditional competitors, MasterCard, American Express, and other established payment networks. Fintech disruptors. Companies like PayPal, Block, and emerging blockchain-based payment systems. Local networks, domestic payment networks in various countries, particularly China's UnionPay. Despite these competitive pressures, Visa's scale advantages, brand recognition, and technological capabilities provide significant protection against market share erosion. 5.3 Key risks and challenges. Several risks could impact Visa's ability to compound capital over the long term. Regulatory changes, potential increased regulation of payment networks, including interchange fee caps and antitrust scrutiny. Technological disruption. Blockchain technology and decentralized finance could potentially disrupt traditional payment networks. Economic cyclicality. While Visa is less cyclical than traditional financial institutions, severe economic downturns could reduce transaction volumes. Geopolitical risks. Trade tensions and geopolitical conflicts could impact cross-border transaction volumes. 5.4 capital compounding potential for Visa to compound capital effectively over the next decade. Several conditions must be met. Continued displacement of cash transactions by electronic payments. Successful expansion in emerging markets with under-penetrated payment systems. Innovation leadership in areas like AI, blockchain, and real-time payments. Maintenance of regulatory relationships and avoidance of punitive regulations. If these conditions are met, Visa has the potential to deliver strong total returns, supplemented by consistent dividend growth. 6. Final verdict. Buffett-style investment suitability. Based on comprehensive analysis through Warren Buffett's investment principles, here is how Visa Inc. measures up against each of the key criteria. A. Understandable business. Visa operates a relatively straightforward payment processing business that is easily understandable. Rating. Excellent. B. Consistent earnings. Visa has demonstrated consistent revenue growth and exceptional profitability with minimal cyclicality. Rating. Excellent. C. Good ROIC. Visa S ROE of 51.75%. ROIC of approximately 28.35% far exceed Buffett's typical thresholds. Rating. Exceptional D-low debt. With a debt-to-equity ratio of 65.02% and interest coverage of 174.15x. Visa maintains reasonable leverage with minimal risk. Rating. Good. E. Attractive valuation. The stock appears fairly valued to slightly overvalued based on current earnings. Trading at a PE of 33.36. Rating. Fair def. Long-term moat. Visa possesses a wide economic moat through network effects, brand recognition, and scale advantages. Rating. Exceptional 6.1 overall assessment. Visa Inc. largely meets Warren Buffett's investment criteria and would qualify as a high-quality business worthy of investment consideration. While the current valuation is not deeply discounted, the company's exceptional competitive position, financial strength, and growth prospects make it attractive for long-term investors. The company might be appropriate for investors seeking a combination of growth and quality who are comfortable paying a reasonable premium for an exceptional business. Buffett would likely appreciate Visa's capital-light model, exceptional returns on capital, and durable competitive advantages. For those interested in the payments sector through a Buffett lens, Visa represents one of the highest quality options available, though investors might prefer to wait for a more attractive entry point given current valuations. Table. Visa Inc. Buffett-style investment suitability, summary criterion assessment explanation. Understandable business, excellent payment processing model is straightforward. Consistent earnings, excellent demonstrated consistent growth and profitability. Good ROIC, exceptional ROE. 51.75% ROIC. Approximately 28.35%, well above 15% threshold. Low debt, good reasonable leverage, with exceptional interest coverage. Attractive valuation fairly valued to slightly overvalued at current price. Long-term moat, exceptional wide moat through network effects and scale advantages. Overall suitability recommended meets most criteria despite full valuation.